The Fed just held rates steady, again. But for the first time in decades, two governors broke ranks. With booming employment and inflation lurking, is this pause prudent or perilous? This split decision could tip the markets. Watch the full video to understand why.
Thing number two, the Fed stays on pause. And then what does this mean for what we've been talking about over the last, 12, 18 months ad nauseum?
Yeah, so Rob, the Federal Reserve concluded its July meeting. They surprised nobody by leaving interest rates changed. I thought it was the right move, or at least I did until the employment report on Friday came out. The big news on the employment report wasn't just that the 77,000 new jobs were relatively low. It's that there was a massive revision to the prior couple of months. People seem to be upset about the fact that President Trump fired the person at the BLS, the Bureau of Labor Statistics, who compiles this. Like, oh my God, how could he do this? My question is, oh my God, how can the BLS have numbers that are so unbelievably horrendous that the revisions are 2 to 3 times the actual number? I mean, that to me is the incredible part of it. In general, the overall economy seems to be doing well enough, and inflation remains above the 2% target, which I continue to insist is 2% too high. For those of you who disagree with me, feel free to put it in the comments, but here's the deal. The Fed's mandate is stable prices. 2% inflation is a way the government steals from you through a process called seigniorage, but that's how they steal from you slowly. I don't want the government stealing from me at all, quickly or slowly. I've been outspoken and out of consensus for the last, 4 or 5 months and saying that Trump tariffs would not lead to disaster. But I do think the insistence of some that it'll take a few more months for tariffs to work their way through the complicated supply chain and potentially lead to higher inflation. That's a reasonable concern. It hasn't happened yet, but that doesn't make them wrong yet. Jerome Powell continues to provide a measured presence. He's talking about the good and the bad of the economy. He's always highlighting uncertainty, which President Trump loves, being a little sarcastic there. I think the big news is that for the first time in decades, the normally unanimous Federal Reserve had 2 governors voting against the no change in policy decision. Now, people are debating, right? So they're debating, did these 2 people dissent because they think it's time to lower rates, or did they dissent because they're trying to impress the president with their accommodating stance and are eager to replace a soon outgoing Chairman Powell? That's unknown. We can't know why they're doing it. But I do think it's interesting that, more and more of these Fed governors are dissenting. I think they'd like to have the big chair. Who wouldn't in that position? There are also a lot of people talking about the political aspects of this and saying, oh my God, there's more dissent. Hey, I think that's a great thing. I've long thought it was very disturbing that everybody in the building at the Federal Reserve somehow agrees there should be dissent. The economy is complicated. There are reasons to have discussions and debates, and always providing a unified front. I get it. That makes people feel secure, but I want to know that there's discussion and debate. That's what we do at Deep Knowledge Investing. I'm okay with people dissenting for whatever reason and then explaining their reasons. And that's where we are right now. So people seem upset about it. I'm okay with it.
Yeah, and I mean, I think, Gary, there's just a lack of understanding of how all this works, right? From the general investor, just the general individual, in terms of how the Fed fund rate works. I know we're going to talk about that a little bit as well, but then just what that control is, but then what it should be doing as well, right? I think now on the flip side of this, you're seeing, okay, President Trump and lower rates, and he's turned Powell into this just enemy that everybody has now mob mentality around, right? And that's obviously President Trump's way of negotiating, doing deals, leverage, all of those things, right? But in reality, I completely agree with you, right? Here at DKI, we've been saying this for the past how long, right? So when you have all this noise and all this fluff that you see online and all these headlines that the media wants you to think, none of it really matters, or I don't think sometimes it matters. And then you have these revisions Same thing was happening with the jobs report during the Biden administration, right? And we would see these numbers and just absolutely laugh at them because they were arguing for this economy. But when you really looked at it, bifurcated economy, like you've talked about, right? Some people doing really well, a lot of people doing really poorly. Jobs, yes, growing, but only for the public sector, not for the private sector, right? Like we've talked about. So that's what I wanted to ask is, this fight between Chairman Powell, President Trump, it's good for the headlines. We like making the memes of them. They remind me of the Rock'em Sock'em boxers.
Exactly,
right?
yeah.
If someone needs to do a toy, that thing would sell out off the shelves. But my question, Gary, is like, does any of this matter at the end of the day? Break that down for me.
Not even a little. If for everybody spilling tons of digital ink on this stuff, I suggest you view this like an economic reality TV show, right? I mean, that's really the way to do it. So look, let's address some misunderstandings here. A lot of people believe the Federal Reserve controls interest rates. That is not true. The Fed only controls the overnight rate. The Fed funds rate is the overnight rate for banks. The bond market sets the rate for the rest of the yield curve. Now, some of you might say, okay, right, but the rest of the yield curve gets set off of the Fed funds rate, and the answer is only sometimes, right? And so let's talk about why I think none of this matters and why my position on rate cuts is completely unchanged. It's because they're going to have no effect. Last September, when the Federal Reserve cut rates in a futile attempt to lower borrowing rates, the yield on the 10-year Treasury rose as the market priced in expected higher future inflation. So we had an inverted yield curve, meaning short-term rates were higher than long-term rates. That's unusual. That's why it's called inverted. But the yield curve uninverted itself and became a regular yield curve in exactly the way the Federal Reserve didn't want. They lowered short-term rates. They lowered the overnight rate by 100 basis points. It's just a fancy finance way of saying 1%. Well, guess what? The yield on the 10-year Treasury rose by 100 basis points. That's the opposite of what they were trying to do. So I think the real issue is inflation is being caused by congressional overspending. Basically, this spat between President Trump and Chairman Powell, it's just a reality TV show, and it's the only way to look at it, I think. I also think everybody is wrong on this. I think President Trump is wrong to insist on a lower overnight rate. I don't think it's going to help his cause. It also makes it look like the Fed is being political. More on that in a second. I think Chairman Powell has been wrong on inflation for years. He kept the Fed funds rate far too low for far too long. He was late in hiking and early in easing. So I think they've been wrong. And then the press has been wrong on all of this. People are saying, oh no, this is causing people to view the Federal Reserve, which is supposed to be independent. They're viewing it now as a political institution, and President Trump has turned the Fed into a political institution. What in the world? What are you kidding me? It's always been that. And if you think I'm wrong, let's go through some historical examples, right? It was the Federal Reserve that made the massive spending plans of FDR possible when he created the New Deal. That was a huge amount of spending. Who do you think monetized it? Then we go later, right? President Johnson, the Great Society. Okay, again, more spending there. And if you think that wasn't political, President Johnson famously picked up then Federal Reserve Chairman Arthur Burns and slammed him into a wall, literally strong-arming him into lowering rates. Tell me it's not political. Then President Nixon had to decouple the United States from the gold standard in 1971. Now you could say, wait, that was a horrible move. And it was a horrible move, but the reason he had to do it is because we'd spent so much on the New Deal and the Great Society and all of this spending, we didn't have enough gold to cover the dollars. It was the Federal Reserve who made this possible, okay? And then, we go, how about to last September? It's not a secret that everybody at the Federal Reserve despises President Trump. And I wrote back last July, last August, and last September, if the Fed cuts ahead of the November election, it will be seen as political. It'll be seen as Jerome Powell, Chairman Powell, trying to help his preferred candidate win the election. Well, guess what? That didn't work, because he lowered, but what the Democrats, the incumbent party at the time, needed was they needed lower long-term rates to goose the economy. Well, they didn't get that. It's because the Fed is irrelevant right now. And so basically, we've had decades and decades and decades of the Fed being a political institution. President Trump, I disagree with him being out in public trying to strong arm Powell and strong arm the Fed. It's a bad look, but this is the thing now that's made the Fed a political institution. It's always been a political institution. The Federal Reserve exists specifically so that we can monetize debt. Right? I mean, that's it's there to create the ability for the government to spend more. It's always been a political institution.
Yeah, hashtag end the Fed. Gary's all about that train.
Love
for
that.
sure. Yeah, love that. And Gary, you're exactly right. I mean, it's kind of the inverse of the boiling frog analogy, right? Except we've been keeping these low, suppressed interest rates for far too long, when in reality, there should have been some raises and upticks over the course of the last 10 to 15 years. And yeah, this has been politicized since day one, of course. But as you mentioned, with concrete examples, that's been going on for a very, very, very long time, far before President Trump. But then on the flip side, yeah, disagreeing with how this is playing out. So, Gary, appreciate you being able to look at things from both sides and provide an honest opinion. So, and if you disagree, we love that. That's great. Please give us a thumbs down. Tell us how bad this show is. I think we're going like the anti instant gratification at DKI. Just do things inverse here. So, but yeah, leave us a comment. Let us know what you think. Ask us a question. We'd love to have some discourse in the comment. Head over to our website, deepknowledgeinvesting.com. You can sign up for a free newsletter subscription, and then we have a monthly premium subscription that runs $100 per month. Access to the entire website, non-gated content, as well as, most importantly, the current portfolio recommendations.